Hi guys, it's Thomas here from COTBase.com. Welcome to a weekly COT review. Today we're going to be analyzing the second Commitments of Traders report of 2023. And as we always do, we shall start off by looking at the largest changes in commercials positions. In this review, I will once again show you the wonderful iCOT intraday indicator. We will be choosing copper this time. Just a sneak peek on what the indicator is doing over there. And for those who are new to COT analysis, here at COTBase.com, you will find a lot of educational material on the Commitments of Traders report, COT report. You can find the basics, what kind of reports there are. We have some very useful typical setup examples that will show you what we actually analyze. By the way, these reviews are following those notions. We do have some very useful videos for you that will guide you through the analysis process, showing you what kind of tools there are for you to analyze this wonderful data that CFTC publishes for us on a weekly basis. So back to the review, and let's start off with lean hogs. As you can see, we are analyzing the classic COT report type, and we are using the futures and options data combined. So lean hogs is on top of our list. We have the largest change in commercials net position based on a 52-week look-back period, so meaning basically the last 1 year. This is the size of the change in their net positions, 29% compared to the past 52 weeks. It is significant, larger than average. If you look at the chart, it is a bullish COT change signal. And actually, it's coming after we have experienced a decline for the past 2-3 weeks now. So I think everything is aligned. These are the type of COT change signals that I would act upon. It's sometimes the case that we have a bullish COT change signal, but let's say Wednesday, Thursday, Friday, the market has already rallied. So we like these kinds of setups when the change signal is pointing opposite to where the market is headed in the past days and a couple of weeks. So this is a bullish COT change signal. Now, if we move on to the 5 years chart, we get a chance to examine where this current report stands compared to a longer time horizon, meaning we can analyze stress levels in the market. So if traders are, over positioned in one or the other direction, that can hint a shift in the trend. As you may see, we have a few great examples of this happening in the past. So this is lean hogs, and the recent report is closer to bullish COT extreme levels. If you go back further, like over 3-4 years, you can see that commercials were actually sometimes able to reach net long levels. We are not there yet, but we are headed in that direction, meaning if the price continues lower in the next couple of weeks, I would expect commercials possibly even going to net long territory, which would be a wonderful bullish COT extreme. Not that the one we have right now is, cannot be considered as a bullish extreme. If you compare this on a 2 years time frame, or definitely if you look at this range, hitting bullish extreme levels, and you can see what happened to the market when we reached an extreme like that. So bullish extreme building up. Next couple of weeks and month ahead of us, we should be seeing an opportunity on the long side. The next market, copper, which by the way, we're going to analyze with the intraday indicator as well. But let's start off with the classic COT analysis and move back to the 1 year's chart. Here we have a 22% change, but in the opposite direction. This is a bearish COT change signal. And again, the situation is such that we are happy to see the signal pointing in the opposite direction in which the market moved in the past 1 week. And you can see the magnitude of this change in commercials net positions is greater than average, possibly the top 3 or 5. So it's a significant change. You can see what happens when we have a larger than average change size. So this is actually an opposite signal, a bullish COT change signal. We had a significant one over here and nothing happened. So, it's just good to know that these change signals are obviously something to take into consideration, but does not mean we're going to expect the market to move right away. But it does signal something is changing, and you can see we sort of reached a interim bottom over here, which led to a 2-3 weeks rise, modest rise, in the market. And as the market continued its down course, we again saw larger than average changes, bullish COT changes. So this is something you should keep in mind. We may see, the opposite happening here, continuation of this rally as we're getting these larger bearish COT change signals. Now, I should point out that you should always look at the extreme situation as well, because, if we have had a bullish extreme, which you can see more or less we had from, the middle of last year, that seems to be, efficient and pushing the market higher, then, we should be expecting these larger changes in the opposite direction as the trend. So we had a bullish COT extreme. The market is moving higher. That's something you should consider. Nevertheless, this bearish change signal suggests we can see bearish moves in the next couple of days. Now, if we switch over to the TradingView platform, and don't worry, we're going to get back to the classic COT review in just a second, but this shows you what the iCOT intraday indicator is capable of. So again, this is not a data that comes from CFTC. However, it does mimics the classic COT charts. It is our iCOT scores, and we are analyzing stress levels. And you can see how well the system caught this bottom that happened on the 4th of January. So not that long ago, we had that stripe signal, which is the strongest of all. And for those who are new to this indicator, just a second, let me show you what I am talking about. So the iCOT intraday indicator here is a new indicator that we developed after many years of research, and it basically measures stresses within the market on a shorter time frame, contrary to classic COT analysis, which is a weekly data published by CFTC. This is our own indicator, and you can see that we have similar charts. We actually call them speculators commercials, just so that you kind of understand the similarities, and we get these signals from the system that will show a larger than average stress in the market. Now, if we have a stress significant in both speculators and commercials, and it is supported by the balance line, that's the time we actually get these vertical stripe signals. That's how we call them, stripe signals. You can see how well on this example chart, which is gold on a 1-minute candlestick chart, we reached an extreme over here, a bearish extreme, and then a bullish one over here. Now, this example I'm showing you is actually the iCOT intraday indicator with AfterSignal. Basically, we are filtering out a bunch of signals so that you know exactly when you want to enter the market. And this example is a very successful one on the copper market, catching this bottom, and basically you're still in if you are following the signal from the system. So back to the review, and let's continue with coffee, where we have a 16% change in commercials net positions. Switching to the 1 year's chart, there we go. You can see that the change is definitely greater than average, top 10 I would say. And again, it is a COT change signal coming in the opposite direction as we are experiencing the trend. So this is, I would say, something that I want to see if I were to act upon a COT change signal. Moving on to the 5 years chart, you can see that we not only have a bullish COT change signal, but we are actually witnessing more of a bullish COT extreme. Now, caution is advised. If we look at this 5 years chart, you can see that there's actually space left for traders to become even more bullish. So commercials could reach, above 90,000 contracts net long level, and large speculators could reach greater than 100,000 contracts net short level. So that's just something, a reference point, so that you don't get too excited about the reading right now. It is, in respect to the past 1-2 years, definitely bullish. So something is, becoming interesting on the coffee market. And in the next couple of weeks and month ahead of us, we may see an opportunity to go long in this market. Let's move on and have a look at large speculators COT extreme. So we are ordering markets based on how extreme large speculators are. And as you may see, with the markets that we have selected, lumber has achieved the gold medal. Here we have a 361 report extreme in large speculators. So quite the significant bullish extreme in lumber. Now we should point out that this bullish extreme has been the case since August of last year without any major shift in the trend. Nevertheless, it's good to know it's there. These extreme could widen and we can reach all-time COT extremes. But it's just a good indicator on what to expect from the market in the next couple of weeks, month, possibly years ahead of us. Crude oil, our next market, 359 report extreme in crude oil. Now, in crude oil, you can see that we are actually in traders' net positions. We do see these long trends, long build-up. So you should be more cautious with these extremes. These can take many months before we reach an extreme that will shift the trend. It does let us know that there's a bullish extreme in the market, and that just simply supports those who think crude oil can increase in value in the next couple of months ahead of us. The last market for the review is going to be soybean meal. I don't think it's a market that too many of you are trading. However, I should point out that soybean markets are one of the best when it comes to COT analysis. So the way they react to these COT changes and COT extreme signals is really remarkable. So if you go and take the time, even on a 5-year chart, you can see that bearish COT extreme, like the one I'm pointing to you, how effective they are. Bullish COT extremes can pinpoint a low in the market. As the market starts, gaining momentum, we are going to get a bearish COT extreme indicating where the top might be. So again, it's a good tool to measure stresses. And right now what we are seeing in soybean meal is that we have a significant bearish COT extreme, not only in large speculators that we're looking at right now, but that's the case for commercials as well, meaning we are expecting a turn, a top happening in the next couple of weeks and month ahead of us. So that was all for this COT review. Of course, there's so much to do here at COTbase.com. If you're somebody who is trading a specific market, you can definitely dig into its data, its COT data. We can have a look at, we talked about soybean meal. Let's have a look at soybean meal. You click soybean meal and there you go. You have everything that you may want to look at. And by the way, you can actually chart these separately if you wanted to. So a lot of handy tools at COTbase.com when it comes to digging into your commitments of traders report on a specific market. If you want, you can actually take advantage of our indicators, the COT Base Pro, which is basically everything you see in my COT reviews, but you can use these tools in your NinjaTrader platform. The iCOT intraday indicator is something that helps you in the shorter time frames. Here we have the basic and the one with the AfterSignal. This is something that I showed you on copper, a tool that can help you pinpoint entry and exits. So really a lot of tools surrounding the commitments of traders report. I do appreciate your attention. Thank you very much for being with me. I hope you guys will have a wonderful weekend, and I hope to see you in my next COT review. Take care. Goodbye.